Equity Management Academy. September 27, 2021. Bitcoin, Moment of Truth. Evergrande Black Swan. The market has been trying to discount the Evergrande news, the Chinese company that is about to default on billions in liabilities. It remains to be seen if the government will bail out the company. If no deal is forthcoming, there will be volatility in world markets. According to the NY Times, control of the banking system gives Beijing the tools to stop a broader collapse, officials believe, while censorship and police powers can stifle protests. The financial world is watching the struggles of China Evergrande Group, one of the largest property developers on earth and certainly the most indebted. Last week, a deadline to make an $83 million payment to foreign investors came and went with no indication that Evergrande had met its obligations, raising questions about what would happen if its huge debt load went sour. China announced a ban on cryptocurrency transactions, the latest in a series of crackdowns on virtual money that comes as countries around the world are considering tougher regulations of their own. Bitcoin. Bitcoin has almost regained what it lost last week. It is showing resilience. It is trading around the weekly average price of 43,687. The weekly initial targets are 47,153 to 51,222, which are levels that represent areas of resistance or distribution of supply. Supply is likely to come into the market at those levels. If Bitcoin goes above the sell levels, then they become support for the next higher fractal in price. Our proprietary robo-advisor, Nikki the robot, relying on our AI algorithm, the Variable Price Momentum Indicator, VCPMI, reported that for Bitcoin, the weekly SMA of 44,943 is bearish. The weekly VCPMI of 43,687 indicates a bearish price momentum. A close above 43,687 stop will negate this bearishness to neutral. If you're short, take profits at 39,618 and 36,152. If long, exit at 47,153 and 51,222. We are trading around the weekly average, which is a choppy area. We have come up from 40,802, which was the VCPMI daily buy signal. The daily and weekly targets, which is the weekly average price, were completed. The signal for day traders is neutral right now. The market is most likely to trade at the extreme above the average price of 47,153, or come down to the level of 39,618. The buy level is where buyers are likely to come into the market and where you want to accumulate long positions. When you go long, you can put a protective stop on a close below your entry pivot point. We do not recommend using straight stops, because if you do, you are likely to get stopped out. You can also choose to use a maximum dollar-based catastrophe stop. We use a $1,000 maximum catastrophe stop on our trades. Your amount will vary, depending on your comfort level. The third option is the level below, which is the buy to level on a close below. When the market is trading around the average price, there's a 50-50 chance of it going up or down, so we do not trade when markets are trading around the average price. We wait for extreme prices, when the trades have higher probabilities of success.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Good morning, everybody. This is Patrick MontesDeOca once again with the Equity Management Academy live trading room, live streaming in YouTube. I wanted to share that latest report that we published in the Associated Press through Seeking Alpha with regards to Bitcoin. And now I want to move into and take a look at the market here and see what it has in store for us for today. There's a lot of fundamental talk on the table this week with regards to stimulus, with regards to interest rates tapering, and also the debt ceiling, which is due on October 18th. And we have gotten quite a bit of what I call spoofing in the silver market here coming down about 80 points, down to 2166. Well, the gold market is holding pretty much its support levels. We are trading below the buy 2 level here on the silver market, and we have entered extremely oversold conditions. We got stopped out on our first trade here this morning. Maximum loss is $1,000 for us, and we are looking to re-enter the market as the market is showing it is extremely oversold. A lot of liquidation right now in the metals markets. Obviously, some kind of a news regarding the stimulus came into the market. And I believe what we're looking at is potentially what I call capitulation of the short side in the market. When you take a look at the metals markets, fundamentally, we have probably one of the most bullish fundamental picture, landscape in the last 50 years, particularly as it refers to inflation, as it refers to the amount of debt, to the amount of stimulus that we have, and yet the prices of the metals are down almost $1 in silver today, 21.59. So the bears obviously have the upper hand right now in the paper market, but I got to tell you that I think this is an opportunity to add more physical. I was just thinking before, this is great opportunity to go out and get some more physical silver. The lower the price is right now, which I believe it's extremely overdone, just in relation to, as I said, the intermarket relationships that we have when you put it together just with crude oil, with commodities. And I don't believe that it is over yet with regards to commodity prices, as we are pretty much experiencing a bottleneck supply chain deficiency right now. We have about 60, 65 ships that are standstill in California, and the likelihood increases more that we're going to have a real grim Christmas, a real dark Christmas. We have a shortage of chips. We have a shortage of just about everything across the board as demand, as we go back into this normal economy, picks up much greater than expected. We're finding that we have no supplies available. And whatever supply is available, it's not being delivered. So there's a logistical problem, a transportation problem, and from what I hear, commodities are being thrown down the waste basket, basically, which is going to cause a little squeeze more than we already have experienced during this crisis, particularly since the pandemic last year. So I think this corrections that we're getting are simply just great opportunities to start positioning yourself into a what I believe is going to be a commodity reversal when we start to see supplies tightening, particularly with food, particularly with soybeans, corn, wheat, when you can't deliver the goods, so to speak, transportation, logistical problems, bottleneck problems, it's a complete mess. And it's going to take some time to resolve this bottleneck crisis issue. So companies are, running a little bit scared, you might say, in terms of how they're going to deal with this holiday season here. But coming back to the market here, this the market has come down. If I can, let me share this other chart here. We're looking at silver right now, and if you look at the market, it has just penetrated the buy one, buy two levels daily, and the daily has gone neutral below 2181. We got stopped out on this move here, and it's come down into the weekly numbers now, 2191, and the buy two level on the weekly of 2141. When you talk about probabilities, you are entering, or the algorithm identifies the area in blue, starting from the daily buy one level all the way down to the weekly buy two level of 2141 as an area where we can expect accumulation of supply. And the markets are completely oversold, beyond oversold. Daily, as you can see, into the RSI, it's extremely overdone. And so this is an area where you can start to build a trading, concept, a trading portfolio, position adjustment, recalibrating your position, because it's just a matter of time before this price is adjusted to its real mean. Just based upon the fundamentals and based upon all of the other aggregates, you might say, and in the market relationships, as I said, the silver and gold market are incredibly undervalued. They're on a fire sale. And once all, I believe, is said and done and things settle down a little bit here, we're going to go back to looking at what is real money. And obviously, as you can see, there's a lot of resistance in digital currencies, Bitcoin. Regulations are coming on, and still in uncharted waters with regards to what it really is. What are their digital assets, digital currencies, their fiat currencies? Because if they fall into a currency category, they just as fiat as anything else. That is right now not backed by any kind of, you might say, support for its integrity in the purchasing power. And, historically, the gold market has been pretty much that balance, that tranquilizer, you might say. So here we are, 40 years later, 50 years later, dealing with the possibility here that the dollar is imploding. And the more stimulus that is being printed, that comes into the market, the more the dollar is going to lose. And that's bringing in this price inflation, that's bringing in this monetary inflation. And we haven't yet seen the reaction in the gold market just based on conventional wisdom. You know, in times of crisis, usually the metals tend to lead the way, risk assets, particularly when you're talking about economic chaos, monetary chaos. So I think we just got to be patient in terms of the expectations that we have here for the metals, because they are doing what they need to do. And, you know, whoever is suppressing the price is coming, I believe, to a point when the market turns around and realizes the value of silver, the value of gold right now. And it will make a difference in a big shift in the supply and demand. So I continue to say to all my gold traders, the bulls in the metals markets, I think it's just a matter of be patient, and we will have our day, and I think it's coming soon. We came into a 360-day cycle yesterday, and we'll be dealing with this report here in the next day or two, and we're going to share with you with regards to what the expectations are for the next 360-day supply and demand for gold and silver. Let's go back here to the market, and there's nothing really that is activating any kind of a signal here with the gold or the silver market, but we are extremely oversold. And gold closing above 2181 or 2191 will activate the daily and the weekly. Or if we come down to 2141, it's going to activate the weekly buy to level, which mathematically is a 95% probability, if activated, that more than likely we will get a reversion back up to the mean. And the weekly mean is 2253. So I believe this gold market is an opportunity to accumulate here. I think we're coming down to the end of this wave count, and we're looking for reversions basically to the upside from these levels. So we want to see whether the market is going to come down to 2141 or trade above, again, 2181 or 91 as far as the silver market. So the gold market is bearish, neutral to bearish. There's no trades. It's trading below the average price, and so it's activated the level below. The buy one level here in gold. $17.29 is being activated right now. The buy one weekly, $17.29, has been activated, and it has completed the bearish pattern by trading below the average. On the weekly, it has completed the 1729 target. So let's see how the market reacts from here. You can see the RSI is about 25%, extremely oversold. $17.25.80 new low. If we close above 1729, that's going to activate a weekly buy trigger. The markets are trading purely technical right now. Obviously, the fundamentals are completely the opposite. So the market is reacting short term to any kind of news. If Chairman Powell sneezes, the market reacts. So it's very nervous right now, and there is still obviously some panic selling, but you wanna be looking to buy into that panic and sell into the euphoria, basically. So we are extremely oversold here. We continue to be oversold, and we've come down to levels that it does appear that if we do get activated by a close above 1729, we're going to be activating some weekly signals. And in silver, obviously, the silver market is tremendously overdone as well. It's down almost $1, which is just completely what I call ridiculous, with no reason forever, except that we got all this massive paper selling that has to be liquidated by the end of the year for Basel III. And obviously, this is a good occasion to raid the market and continue to suppress the prices artificially, but it gives you a great opportunity, again, for those that are stacking, for those that are buying physically, to take advantage of this situation. I think, my friends, it's time to be patient here. Markets are extremely undervalued here, and the expectations are that we could, reverse here very violently from these levels as the market, the sellers begin to and continue to test these levels of major support. thank you again for the opportunity that you've given me to share this information with you. Be patient. Take care of yourself here, and I'll talk to you soon. I'll talk to you next time. Be well.